Welcome to the break room, the break room. 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 Sit back, relax, as we chit-chat about this and that. Now stay tuned, stay tuned. We got an hour to empower, a lifetime to uplift your spirits, but inspire the talented and gifted. We here to motivate, let's get it. Come cop a squat, let's talk about your business endeavors or whatever's on your mind. We got time today, pick any topic, cause it's going down on the break room, the break room. Welcome to 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 the break room, the break room. Break room, break room. Welcome to the break room, the break room. Welcome to the break room, the break room. Welcome to the break room, guys and gals. I'm your host, Mercuree The Personality. And guess who I have for you guys tonight? Well, I'm super excited because I knew of this person and I know of this person for over 10 years. We met on a social media site about 12 years ago, and oh my God, like we've all grown since then, but especially him. He's grown so much, graduated college, is becoming a CPA. So we're going to be talking taxes today. Okay, we're going to be talking a little bit of cryptocurrency. He's going to give us an education in money. So you guys get your notepads, okay, along with your drinks and your snacks, and we'll be right back with Charles J. Kelly, also known as, super cute name, CJtheSmartGuy, okay? So I know it's borrowing from another person that uses that name, but it kind of fits him. He is a smart guy. So CJtheSmartGuy, Charles J. Kelly, we'll be right back with him. So go get your notepads, your drinks, and your snacks, and we'll be right back with the break room. And of course, our guest, CJ the Smart Guy.
How's everybody doing today? Little background about myself. My name is Charles Kelly. I graduated from Texas Southern University in 2013. I went to corporate for a few years, and I came and I started my own consulting business where I met up with a former classmate, Andre Martinez, who we were in an organization called NABA together back in college, and he had already started his accounting firm. I had created my consulting business, so we merged together, and now we're working together to help everybody out and help you guys learn a little bit more about your taxes. I feel like information should be free, which it kind of is. It is. Most of it is on the irs.gov website, but it's not necessarily the easiest thing to understand. I try to bridge that gap. But we also believe that services should be paid for. So we do offer services such as, tax preparation, financial planning, creating your financial statements, your balance sheet, your income statement, things like that. We work really, really hard with small businesses, trying to make sure that they are working as efficiently as possible and they're understanding the nature of their business as well as understanding the health of their company at any given time. There's many benefits to that, such as investors and being able to make financially sound decisions. So today we launched our Facebook website, and I just want you guys to sign up, follow it, like it, share it, whatnot. Hopefully I've been a blessing to you. Hopefully I was able to, spark some type of idea in your mind regarding tax. Remember, tax avoidance is good. Tax aversion is bad. That's how you end up in jail or paying, thousands and thousands of dollars to Uncle Sam. So we don't want that. There's two penalties. You have failure to file and you have failure to pay. Failure to pay is nowhere near as bad as failure to file. So we just want to make sure that you file. There's multiple ways to do that. Remember, just contact me. I'll let you know of all that. As well as be on the lookout. I have a couple seminars going on. Some down here in the Houston area, some a little further. So just be aware of some of the things that are going on. I'll be updating the Facebook page. But if you want personal, back and forth, make sure you sign up for our emails because that's really going to be the way we stay personal. We don't really stay personal through Facebook, but through emails we will. So hopefully you guys have a good night. You guys have a good night. Bye.
Welcome to the Break Room, guys and gals. You know I'm your host, Mercuree The Personality, and I told you guys that I was sitting with the smart guy. Told you guys I would be with Charles J. Kelly, aka CJtheSmartGuy, and of course I told you I was excited about that because we're going to be doing all things finance, we're going to be doing all things taxes, cryptocurrency. We're going to get our brains enlarged with some great information. So, yes.
Thanks for having me.
Thanks for being here. Also, a little tidbit. I think I told you guys probably in the intro that I have known of CJ. That's the level I'm at with him right now. I can call him his nickname. But I've been in CJ's world for over 10 years. We met on social media. It was a whole bunch of fun, okay? It's one of these sites. We're not even going to get into the site because that's not what it's all about. But we were on this site where we was kicking back and acting fools, okay? No behavior. But it was just some people that, you know, stood out. Myself and CJ, as well as a couple of others that stood out. Like, we really were on social media to meet people. We really were in these social groups on social media to meet people, to develop, to grow, and to build our brands and to build ourselves, you know, as entrepreneurs. So we made some real connections, and I'm so glad that I got to really connect with you, and it really worked. Like, he wasn't some psycho. He was like a real guy, humble, okay? Like, totally cool on Twitter, you know, not a stalker, you know, just a straight motivator, straight empower, inspiration to us all that knew him and know him. Also, we literally checked on each other throughout the years and stayed tight. That's hard to do when you come from the land that we came from on social media. It's hard to stay tight, okay? Because some people were like really gone, okay? But this guy has went through college. He's went through a slew of different jobs and was like, you know what? Going to school to get my degree, and I'm going to open up my own. And I was just like, woohoo! Yes, let's get it. So stayed in touch, and we're here now. And what did he go to school for? He's going to tell us.
Okay, so I graduated in finance and accounting. Graduated both of those degrees, and then from there I took a job on the railroad as a financial analyst.
Okay.
And so I was actually learning how to do accounting from Warren Buffett.
Okay.
So Warren Buffett owned the railroad, and I was doing track of all the smaller companies, the subsidiaries.
Okay.
So I had accounts, you know, $200-300 million and
Woo.
things of that nature. Which, yeah,
Big
you know,
money.
I didn't have that money, but
Right.
I learned how to, you know, account
Work
for
and
it.
manage.
Yeah.
Okay.
And so when you learn on that level, you know, when you scale back, it's a lot easier to see, okay, well, if this is what they're doing for these hundreds of millions of dollars, why can't I apply that to my own life?
Right.
You know, even though my account's not, you know.
It's getting there.
It will be.
Okay.
It will be. I know how to use
Definitely.
it once
All
I get
right.
there. So
Once you have the knowledge, you can start applying it at any venture of your life. So
exactly.
knowing that you graduated. When did you graduate, by the way?
Graduated in 2013 from Texas Southern University in Houston, Texas.
Woohoo! I don't know the mascot and what you're supposed to do, so I'm just gonna go woohoo. Okay, let's do that. Yes,
Yeah, well,
Texas is where it's at, though.
Lots of unity out there.
Definitely.
You know, lots of black empowerment out there, which is important. You know, we weren't allowed to go to certain colleges, so we had to build our own.
Okay.
And so coming from California, I didn't even heard of too many HBCUs, and I went to TSU. I was like, oh wow, this is really awesome. So
Right.
I encourage people to at least look into HBCUs.
Yes, definitely, because you get a fuller, richer, more supportive education. Like, they're going to boost you, and they're going to show you different ways that you can make it in your different industries. So I know you got a plethora of information from them and some backing as well.
Oh yeah,
Because,
definitely.
you just shot right out and was like, I'm going to be an entrepreneur. I'm doing what I got to do. Like, so you had to have some sort of support because, come on, it's hard to do that.
Yeah, so I was working for the railroad for about 3 years, and once I realized, you know, this isn't for me, I got to do my own, I left to study for my CPA. CPA stands for Certified Public Accountant,
Okay.
which essentially means that the state, got mine in California, but it's countrywide. It's pretty much the same in every state.
Okay, so you don't have to, like, after you got it in Texas, you didn't have to get it
you don't have to get it anywhere else. You can.
Yeah, so I got it in California.
Oh, you got it in California. I'm
Correct.
sorry.
And so I can. It's federal law.
Okay.
So since it's federal, I can use it across any state.
Perfect.
It's just the requirements are slightly different across the different states.
Okay. What do you have to get licensed through in different states because of those requirements, or you still get to use your?
So with my business model, I do mostly everything decentralized.
Okay.
My office is based in California, but I can do people's taxes, bookkeeping across the whole country.
All right. So decentralization basically means you're not stable. Well, you're stable because you know what you're doing, and your company travels with you, so it's stable as far as that. But you're not stable, meaning you don't have an office. This is not your central place of where you're at. You can be anywhere.
Correct. I live in Texas, but my office is in California.
Okay.
So on a personal level, I can take advantage of the lower cost of living in Texas while still having my office in California because that's where I got my CPA certification from.
Okay. So you got to keep everything California-based, basically.
Pretty much.
All right.
Yeah.
Got you. It's a little confusing, guys, but you'll get there. You know, if you're into this type of thing, you're going to get there. Me, I'm not a money person. I will definitely have to have someone like this guy in my corner because I'll be like, oh, what are you talking about? All I know is I'm supposed to get $10,000. And I don't know what I'm supposed to do with it, but I just know I'm supposed to get that. Yeah. So, but anyway, not to make any jokes, but I'm a joker. Seriously, because I'm trying to understand. You can be anywhere you want to be, but you have to keep it in Cali as far as your paperwork.
Pretty much.
Gotcha.
So it's different than a lawyer. So a lawyer, their laws are based off of their individual state. Okay. The federal laws for taxes are the same across the borders. There's different state laws. So for instance, New York, you guys have state, county. You guys have like a multitude of taxes out here.
And city.
And city. Yeah, in Texas, we don't even have state. We don't have any of those at all. Okay. We just have federal. Okay. And property taxes if you own a house or something like that. Florida as well, there's no state taxes.
Okay.
So California, New York's worse. But those states you pay a lot of taxes.
Yeah.
So I'd rather live in Texas because I don't have to pay all those taxes.
Yeah, you're lucky. But okay, so we're in New York. Mm-hmm. This airs in New York, and it does air other places, but it's streaming wise. So since we are New York based, New York wants to have information. We want to pick your brain. Okay. We're going to have a universal, of course. But if you could tell us a little bit about, you said that Trump had changed a lot of tax codes and things of that nature. In the next segment, I would like for you to kind of get into some of that. Okay. And, from New York to branch out, if you don't mind.
Sounds good.
So, guys, where am I? I'm here. Guys, you sit tight. You still got your notepads. I hope you wrote a couple of things down because now it's getting to the real smart wire, okay? So, we'll be right back. Go get them notepads and that pen. We'll be right back with the break room.
That part.
How y'all doing today? Once again, it's Charles Jarrell here to talk to you about who must file taxes. If you have worked and you've made over $10.4 thousand this year, then you want to go ahead and file a tax return. If you are a dependent, meaning somebody can claim you on their taxes, but you've worked and made over $4,000 this year, you want to go ahead and file. If you are self-employed, meaning you have your own business and you made over $400, you want to file a tax return, as well as if you owe back taxes from prior years. Now, it may be still beneficial for you to file a tax return even if you're not required to, especially if you worked, if you're a student, and or have a dependent that you can claim on your tax return. You might as well go ahead and file and see what you can get. Have a good day. Hello, everybody. I briefly want to go over the 5 filing statuses for taxes. You have single, married filing jointly, married filing separately, head of household, and qualifying widower. For single, this is probably the one with no kids and they're not married. You have married filing jointly, which is normally the most advantageous for a married couple. You have married filing separately, which is typically for spouses who make large amounts of money and or they have one of the spouses has a high medical bill and or back child support. You have head of household, which is typically the most advantageous for somebody with a kid but still single. And you have qualifying widower for somebody who their spouse died within the last 3 years. If their spouse died this year, then they'd still do married filing jointly. Take care. How y'all doing today? It's Charles once again, and I want to briefly talk to you guys about what a tax refund is. Well, how come some people get a lot of money back from the IRS while other people have to owe? Well, essentially, a refund is an overpayment of taxes to the government. So essentially, you're giving the government an interest-free loan if you're getting a refund. Ways to avoid this is by correctly stating your exemptions on your W-4s if you're an employee, and if you are a business, to send the correct estimated taxes on a quarterly basis. Other ways people get refunds without overpaying the government are through refundable credits, such as the Earned Income Credit and or the American Opportunity Credit. Y'all have a good day.
And we're back, guys. Welcome back to the break room. And of course, you know, I'm Mercuree The Personality, and I'm still sitting with CJ the Smart Guy. Charles J. Kelly. Okay, guys. In any event, we're here, and he has a statement that he has to make before we get into all of this tax stuff, okay? Because I was talking about, you know, the Cali and being all over the world and global. Like, you know, it confused me. So I asked a couple of questions that have nothing to do with you guys, but
Yeah, so if you're a client or if you're looking for a CPA, because everybody needs a CPA. If you think you don't need one, you actually do need one.
Right.
A good CPA can pay for themselves, and you don't have to search for a CPA in your individual state. Any CPA that's certified is good around the country. We're certified to do your taxes, your bookkeeping across the whole country.
right. So don't worry. They're smart, okay? They're out here learning all the different laws and all the different states and cities and counties and towns and this and that. So you're in good hands, especially with my guy CJ, okay? Seriously, stop the madness, all right? So if you was worried about that, all right, don't worry about that. But yes, so CJ, we're gonna get a little bit, I guess what you call tactical and technical, and you know, a little bit nerdy. So you got into this whole CPA thing. You want to deal with people's finances tax-wise. You want to keep people tax-wise.
Yeah.
You like what I did there, right?
That was nice.
So, what are some of the key words that we need to know and have the definitions of? What are some of the things that, as entrepreneurs, should I go there first? Because we were going to be talking about the new tax codes. So I wanted to know, should I go with the entrepreneur first, or should I go with the working class people? Because what's the percentage for working class? And
So what happened in 2017, President Trump, changed the tax code almost completely. If you thought you knew taxes before, you don't. And so 2017 Tax Cuts and Jobs Act, what it did is it really helped entrepreneurs and investors, and it somewhat hurt the working class. When I say hurt the working class, what that means is you inflate the dollar. So we're talking inflation. When you think of inflation, think about buying power. So, you know, 40 years ago, gas wasn't, you know, $3. It was a lot cheaper. So the buying power for your dollar has gone down. So that's called inflation, when your buying power goes down for your money. And so what Trump did was he brought a lot of money back from overseas, brought more money over here, which devalued a lot of the dollars. So if you're in the working class, you may have gotten extra money at your job, you may have got a slightly bigger refund, but your buying power has gone down. If you're an entrepreneur or if you're an investor, you know, there's something called bonus depreciation, to where your first 20%, you know, whatever you make, you don't pay taxes on. If you're an investor, you have something like opportunity zones, where you can actually buy into low-income housing areas and not pay any taxes on it, on your capital gains and things like that. So if you have a stock, you sell it for a gain, you might not have to pay any taxes on it if you buy into low-income housing areas.
okay,
Some people see this as gentrification, to speed it up. Other people see it as an opportunity to rebuild their own neighborhoods.
right,
And so the laws are the laws.
Right.
I try not to get political with it.
Right.
All I do is just let you guys know what the changes are, because at the end of the day, we can all be entrepreneurs and we can all be investors.
okay,
To become an entrepreneur, all you have to do is file with the state, file your LLC, separate your business expenses from your personal expenses. So once you get your LLC, you'll get an EIN number, which is essentially like the social security number for your business. And just use your card, you know, for whatever business expenses they are.
Right.
Talk to your CPA. about what are the
what's the difference? So like if you say at me me as an example, being a personality, a television personality, and I was to take you to lunch to discuss the haps of the show and how we were going to do the interview, I could put that off as a business expense.
Exactly.
If I was going to buy lipstick or hair gel or whatever, I would say that's a business expense because it's part of my look and what I have to look like for my business, right?
So you could say that, but as your CPA, I would refrain away from the lipstick. But I would say the food is perfectly okay.
Okay. Why not the lipstick? Because isn't it part of my look?
Yes, but it's not an official uniform. If you had an official uniform, so say if you are a doctor.
Black. I wear black. Is that not official uniform? It's a gray area.
Yeah.
Okay, right.
And as your CPA, I would make sure that you don't want to get audited by the IRS due to gray areas.
Okay.
I would want to do what's best, in your interest.
Okay.
My best interest to make sure the IRS doesn't come after you first.
So my look would never be a business expense, even though my look is what gets me my money. How do you?
So let's say if you were a rapper and you had like a $40,000 gold chain. The gold chain could be considered a write-off because that's part of your costume. Because a normal person wouldn't just walk around with a $40,000 chain on.
Right.
But a normal person
would wear lipstick. But $40,000 lipstick?
I mean,
I'm trying to come up with something here, guys.
There you go.
For us, talk show hosts. I'm trying to come up with stuff. 'Cause we always gotta look good. Like, that should be a business expense. Like, shit. You should know how much lipstick we gotta go through and all kinds of stuff. And I gotta keep buying gel. Oy vey. But no, okay, so if it was like a $40,000 situation because it's abnormal.
Correct.
No one's doing this
Correct.
every single day.
Exactly.
So I can put this off. Okay, so
Correct.
we're talking lunches, we're talking business deals, like, excuse me, not business. We're talking, like if I was to take them to a strip club and, do business there, I could take that off too.
So one of the laws that he changed, so that's a good point, entertainment used to be a write-off.
Oh,
Trump got rid of the entertainment part, which that's going to change a lot of things for a lot of businesses because a lot of deals were done at the strip clubs.
It was. That's what I'm trying to say. The clubs, we hang out and, we rub elbows,
Yeah.
we get high. Everybody's like, oh, yes, we're going to do business.
Yeah.
And tomorrow we're like making millions of dollars all off of that fun we had.
Yeah. But the meals are still...
The meals
are still part of it.
I got to feed you.
When you go to the club now, instead of, throwing dollars or having a big entry fee, now you just spend on the food. So there are ways around
it.
Yeah.
So if I throw it to the ladies...
That's not a write-off anymore.
No. But if I say, I bought the ladies food...
There you go.
There
you go.
But I really do it to the ladies.
As you want to have some type of documentation on
Right.
it. So a lot of times, like, when you go in there...
Put chicken fingers on it.
Yeah, chicken
Yeah.
finger. And
They do that.
This really happens.
Yes,
like,
you're right.
I know when I was...
I know we're making jokes, but this happens.
This is serious. Like, this... Yeah, people. These are things that people just don't know.
Right.
That they really write these things off. Like,
right.
I know I was working with somebody and they went to a Beyonce concert.
Right.
$49,000 front row. That's a write-off because they went with a client.
Okay.
And it's like, a Beyonce concert? You were going to do that for fun anyway, but it was
really
in the name of business, so it's okay because a business, your goal is to make a profit.
Right. So if I schmooze in that way, then I can write it off.
Correct.
Okay. Because that's not normal.
Correct.
Who's going to be front row? Who's going to spend that kind of money? So it has to be a situation in the write-off, so that we could just do this in layman's terms. It has to be a situation, guys, where this is astronomical, not happening on a normal basis, and something that can denote profit from it.
Correct.
So it's not just I take you somewhere and whatever. No, something has to transpire as a result of this thing happening here. Like
Correct.
me being with Beyonce and and
Correct.
we're doing all this schmoozing.
Yeah.
No, now I have to show that I did some sort of business with this individual, whether it comes out to be great business or mediocre business, it doesn't matter.
Correct.
It just matters that I had some sort of dealing with this person.
So say if you have a job, let's just say you make $100,000 a job, you're doing well. you're paying maybe $15,000 in taxes.
Okay.
But let's say you start your own business, and you're allowed 2 losses every 5 years.
Okay.
So say that first year you wind up taking a loss of like $10,000 because
Right, you splurge, you try to get people in, right.
Well, instead of paying tax on that full $100,000, now you're only going to pay taxes on your first $90,000 because you can write off that $10,000 loss.
Okay.
So now you're already, giving yourself a raise just by starting to become an entrepreneur.
Okay.
And if you profited, then you've profited and you've made more money.
Right,
So
and you don't even have to give anything back.
You don't have to give anything back.
Right.
So either way,
You win.
you win. And so that's what the Tax Cuts and Jobs Act encourages, is to become entrepreneurs instead of just sitting on a paycheck that's coming from somebody else.
Right. So that's how the working class can actually maximize on the new tax code.
Correct.
Perfect. Okay, so what are some of, like I said, some of the key words and some of the definitions? Because some of this language and some of the some of the some of the diction, the things that we're reading, is a little, some of the documents can be a little overwhelming because of some of the wording, some of the things. So, like, maybe give us a little rundown of some of the definitions of some of these words that might, kind of overwhelm someone or get someone intimidated to whereas they're not even.
How y'all doing? Once again, it's Charles Jarrell coming with you guys. Today I would like to briefly talk to you about the quickest way to give yourself a raise. The quickest way to give yourself a raise is essentially to start your own business and or become a 1099 employee, which is essentially a contract worker. For instance, Uber drivers. I know a lot of people who join Uber simply to write off the depreciation from their car. They can also write off their license, title, registration, their insurance, maintenance on the car, their wireless plan on their cell phone, as well as part of their mobile cell phone and their chargers for it. These are just some quick ways to give yourself a raise from a tax perspective. Other people also like to turn their hobbies into a business. A business is essentially something that you plan on making money in time, but you're allowed to take 2 years worth of losses in the meantime. Y'all have a good day.
Welcome back to the Break Room, guys and gals. I'm your host, Mercuree The Personality. And I know you guys see me smiling and all this and all that. It's because I love bringing you valuable content. And this time, it was in the finance department. Super excited about that. I hope you guys took some great notes. I hope you guys enjoyed the guests that I bring. And we'll do it again, of course. This is not the end of the course of learning and growing and developing in our lives, financially, business-wise, personally, career, all of that good stuff. We're here for you. This is what the Break Room does. We inspire, we empower, and we motivate, okay? And, of course, we educate as well. So I'm hoping that you guys got a little great education in the CPA world, taxes, finances, cryptocurrency, all of that good stuff. I hope I did well by you. All right? We'll be right back with the Break Room and 2 shakes of the lamb's tail, okay?
Back and take a break with us here on the Break Room, the Break Room. Come back and take a break with us here on the Break Room, the Break Room. Come back and take a break with us here on the Break Room, the Break Room. Come back and take a break with us here on the Break Room, the Break Room. It was an honor and a privilege to have you come and kick it. Just wanted to say thank you. Hope you learned a little something related to tab it and see you in the New York hit with a high minute. Since we sparked your interest, hit us right quick and come back and take a break with us here on the Break Room, the Break Room. Come back and take a break with us here on the Break Room, the Break Room. Come back and take a break with us here on the Break Room, the Break Room. Come back and take a break with us here on the Break Room, the Break Room.